point.
Go ahead.
Oh, it was probably around the 2 o'clock time when the
Mm-hmm.
price was dancing around that 57.05. And I
Mm-hmm.
looked at my VWAP and I looked at the GEX and it just said
Mm-hmm.
57.30 and I could get in, get decent
Mm-hmm.
profit. But I
Mm-hmm.
just said, man, I think it's going to shoot up again like it's been
Mm-hmm.
doing. So I
Mm-hmm.
stayed out and then it just tanked.
Mm-hmm.
And then I had that last minute call credit spread that I said, make sure you cancel everything out before it goes against you. And luckily it didn't this time.
Mm-hmm. Yeah, yeah, yeah. I don't know what this is, that last 345, Jared. I'm glad that worked out for you. But this 345 candle, it doesn't give, and I need to investigate further because I'm trying to get a good understanding of what is the situation that lets us know it's gonna bottom out like this. How do we know? How do it know?
Yeah, I was looking, trying to see if like there was some big announcement or
There
something, and I
was,
didn't see anything.
Anything.
there was some news.
What was the news?
So
What was the
the
news?
news was that if you make over 2.5 million, you're gonna be taxed at a little bit higher, I think 39 versus 37%. And the way they worded it, because technically that's what you know, VP Harris was along that line. I don't know if the threshold was 2.5 million, but
Mm-hmm.
yeah, millionaires you're gonna get taxed a little bit more. So now the spin was, well, usually Republicans don't want to tax, and so they were like, Lutnick was speaking. He's like, and it's great. If Trump thinks it's great, it's great. And I was like, y'all I don't know if that, but that literally came out right before and during the time it went down. Um,
Mm.
so that's the only news that really came out at 3:45. Now, I find it interesting that it is coming out around 3:45, which is
Yeah.
nice in the sense that now we really have a barometer to say, okay, this is the time flex. And I was with my mouth wide open instead of going back to the GEX chart to
Mm.
realize, oh, look at that. You saw all the red just how it just drooped that one little, and I was like, oh wow, look at that.
Mm-hmm. Mm-hmm. Mm-hmm.
So yeah, but
Yeah,
340.
it's happening so fast though. It's just unreal. Like, so we can go, and of course we're getting the GEX chart every 5 minutes. So even with that, so this is 350. This would be the GEX chart at 350. Let me get it back on screen. Here we go. This is the GEX chart at 350. Right? So we're in the red, which we do know the red is your slippery slope, right? So let's go to the 345 one. This is the 345. So it's getting down into, you know, into the zone. So let's say I'm going to go one more. Let's go 340. 340 is hovering at the tripping point. This is the flip point. So it's now at the flip point where you're kind of seeing that it could go either way. The gamma, though, 5277 is gamma. So this is a pretty good, strong gamma, which we think would keep it pulled to the top. But now we're at 340, 340, we kind of, it's probably going to slip a little bit. Then by 345, we're now into, I don't want that one, I wanted 345. So 345, gamma has dropped by about 3,000 points, and we're now down into the red. So we do know, and down here in our blue line, it's now dropping off. This is an indication for us that it's falling off into the red. Now, I wasn't in front of my computer, so I couldn't help navigate us through some of this because that maybe would have helped us. But here we're at 345. We don't gotten to the red at the big bar. Gamma has dropped off, right? That's 345. 350, we deep in the red. Gamma is now negative. The line down here is now below the red, right? Basically, this is a full slippery slope, And then 355, we don't went down even further. Gamma's even more negative. This is an indication, but by the time we get, so I guess if we're waiting till if you're waiting till 350 and 355 to get your maybe a call credit spread or put credit spread, that's cool. But what if you're in position before this, which is what some of us, may have been in position before this? How do you know beforehand that this could possibly be what happens? So if you're in position before 340, how do you know that it could potentially do this whole drop thing? Okay. How do you know this? Because we're looking at 335. This is 335. We're still in the green good. 9,000 gamma. There's nothing here that is saying it's probably going to pull back, except for the fact that gamma has turned around a little bit down here at the bottom. You got a little bit.
You're not showing the gap.
I'm just talking away. Y'all don't see my screen.
No, ma'am.
Ah la la. Let's see. What screen am I showing? Screen one? Oh, I'm showing the wrong screen. Thank y'all. Oh Lord. Okay, now I need to start over. Okay, so let's start at 330 then. We're at 330. This is our 330 chart. Thank y'all for interrupting me. This is our 330 chart. Gamma is at 10,000, right? We're in the green, thinking we're gonna hold up here. We're 10,000 is our gamma. Gamma is holding this blue line at the bottom, right? Then let's go to 1035. I'm gonna get it to where I can make it bigger. I don't have to keep picking I can just scroll down and we can see it that way. Give me some pluses. There we go. One more. Okay, so this is 1030 here. My mouse is, right? We've got 10,000 is our gamma. Then 1035, gamma has dropped off a little bit, but the bottom little chart thing here, see, you can't see it really good back there, but it's on turn back a little bit, saying that gamma starting to come down. We went from 10,000 to 9,000 something, and we're a little bit lower here. That's now 335, right? Now we're at 340. 340, gamma done turned all the way back. We're half of the gamma. Gamma's now 5,000. So remember, it was at 10,005. Then it was at 9. Now we're at 5,000. So in 10 minutes, we've lost half of our gamma. And we're now at the tripping place. We're now at the trip place where we flipped over from positive to negative. This is 340. This is the only way we kind of have a bit of an indication that it's probably going to slip. This don't help us if we're already in position though, except for to let you know that if you're in position, you might need to be watching and get ready to jump ship. That's all this really could maybe tell you, is that our gamma is going downwards now. Right? Then we're at 345. We still going a little bit lower in the red. Gamma is at 2,000 now. It was at 5,000 5 minutes ago. Our line down here all the way going just down, down, down. Right? 345 gamma is now negative. We deep in the red. We don't drop to below the red line here. Basically, we in the slippery slope at this point. It's just going to keep going. But if we at 350, it's 350. So now if you're at this point and you're thinking about maybe getting in at this point, what you can use this information now to say, it's going down, so I might as well do a call credit spread and ride down some more. This is what you could possibly use this for. But if you already got something as a put credit spread, now you in, Tanya territory where she says, watch out below. This is where you kind of now looking at the watch out below. And then we move on to 355, further down, lower. GEX or gamma is negative 7,000. It was -2 before. We'd way down in the red, still call credit spread. But if you got some put credit spreads from before, now this is where I will strongly encourage us yet again. To be honest, we are no longer, or we are really, we're struggling to be in the streets where we can take it all the way to expiration. Just because of the fact that we know them last 15 minutes can do this kind of foolishness right there. So if you can lock in your PDT hacks or something, if you can lock in something or be far enough away where, it's hard. It's a hard call because you're looking earlier in the day and you're thinking, well, if we're looking at getting in something earlier, you can't go but so far below all this stuff before there's no money. If you go too low underneath all this red, there's no money. 5660 is below kind of the thicker 5660, and that would have been safe. 5660 was safe all day, but shoot, by the way it fell this afternoon, you'd have been like, you'd have been worried. But 5660 was safe. It's just, yeah, you'd have had to ride it since you'd have been riding 5660 since earlier today. And depending on when you got in it, you might or might not have gotten decent premiums.
You couldn't have told me we was gonna get back to literally
Right,
the same
right.
exact. I mean, it's 34 cents. That was the difference
Yes.
of the
Y'all know the
closing.
answer to that. Y'all already know the answer though, right?
It
It's
was
manipulation.
manipulated.
So we can't
I think.
No, not the way it ran up and everybody
Yes.
said we're good. And I
Yes,
was like, this
yes,
is good. We want to be good.
yes,
I'm not, I'm,
yes,
you know, it's
yes,
silly, but fine. Let's all have a win. But
yes.
to come all the way back down the way it did
Mm-hmm.
was a
Mm-hmm.
hot mess.
Yep, we went as low as 56. The low today was 56. What's this? 35, maybe something like that. Somewhere 56.35. And we went as high as 57.20.
Yeah, 20. Mhm.
Yep. And we came, like you said, right back to where we started. We opened right here at 56.63, and right in the same zone, we came back to the right. Talk about a round trip.
85 points in between.
Talk
Crazy.
about a round trip. That's the way it goes. I mean,
Yeah,
let's
2
just say
days
we
in a
did it 2
row.
days in a row. Yep. True.
But you had it right, Coach. I love the way you did your setup today
Well,
and yesterday. You worked the PDT, giving it time in reverse.
Well, we just basically, that's why I said that was the leading up into the information that I put into the Telegram this afternoon. I really want, we were doing SPX before we even knew about a Magic 8 Ball. All right. Magic 8 Ball has been phenomenal. It has been something that has been very useful for us, right? It has been useful for us. It helps us with direction. I'm completely appreciative for the gamma stuff that we're getting out of it. But we were working these SPX streets before we even knew that Brian and Magic 8 Ball existed. All right. So we're not a Magic 8 Ball group. We're using Magic 8 Ball along with all the other things that we're using to help us to find our strikes. Sometimes Magic 8 Ball rides and we can use those strikes and we can use them 1-for-1. But if Magic 8 Ball all afternoon today, anybody who was picking Magic 8 Ball strikes this afternoon got breached. But you know what too? Magic 8 Ball, what did I tell? I put up in our, I think it's gone now, but the photos of the best times of day. The best times of day, Magic 8 Ball on Thursday is not quote unquote reliable as far as best times of day go. Magic 8 Ball is not great on Thursday afternoons. It's not great on Thursday afternoons. So this is where we got Thursday, the best times 12:10 to 12:40. Now I haven't gone back to see what were being populated and see how accurate they were. And then another good times 12:50 all the way up to like 1:15. And then you can go maybe up to 1:45, some stuff in the morning maybe, but the afternoon on Thursdays, Magic 8 Ball, just as far as best times go, has not shown itself this whole year to be great on Thursdays after 1:45. So all those afternoon suggestions that came from Magic 8 Ball, all those got breached because the price dropped so bad. Now that doesn't mean that, I mean, we had a lot of volatility today from all the things that we had going on today, but we also know we went through data points to say what are when are good times? I went through all that data to figure out for us when are good times for us to use Magic 8 Ball, and the afternoon or after 1:30, 1:45 is not good. I mean, I'm saying it's just showing itself statistically to not be as reliable. So now that we know that, we utilize what we use on the time that it's reliable. And then when it's not, we use the other things that we have at our disposal. Now, I don't know how we could have seen that we were going to drop off the map at 3:45 like we did, but we were in this morning at 10:30. That trade turned out to be fine. After we went up, we got above that 57.35 area. We got above that. That trade turned out to be fine. I think Jared talked about getting 57.25. That trade would have been fine. Anything after that into them 57, that mid 57s, got to be a little, it didn't make it. Right? It didn't make it.
Yeah, I think it had at one point the range was up to 57.25.
Yeah.
Hmm.
Yeah, on our GEX chart. Now that gamma chart is telling some stuff. That gamma chart is giving, as they say.
This is what I'm talking about, that range. Go back
Yeah.
up to the top,
Right here.
the range in between. Yeah, right. Well, yeah, it gives that top line. It tells you the range is 57 to 57.25. So
Yeah, and we ended in 56.60s. We
that's
ended
what I'm
down
saying.
here.
Go figure. Go figure. And so the struggle is, while we want the green or the positive gamma,
Yeah.
you kind of want to be higher or above. And
Yeah.
that's the thing, is no premium. Whereas in the red or the negative gamma, which at one point prior to us understanding this was a little bit okay, but now we don't even want to touch it because it's like
Well,
going into a paper, it's like going into a paper shredder. You just get all eaten up.
Well, this is the things we have to keep in mind. I want to reiterate this, and then we'll go on into our training we'll go on into our training for today. But these are the things I want to highlight about gamma. So let's now that we got a little something that's fresh in our mind to work with for gamma in these charts, okay? A couple of things are happening in these charts that I want us to recognize. All right. The market makers, okay, the market makers want to keep gamma in this area. They want to keep it up here because it's stable. This is where it is stable in the green, right? This middle place is called the flip zone. This is where it flips from positive to negative. It's right between the red and the green, right? They want to keep it. The big zones, this is going to be the magnet. Price is going to pull towards these magnets, and it did today. Price pulled towards this 5,700. It's going to do that. It's going to pull here. It even pulled after that. It pulled up to 57.25. If we go down a little further, the gamma's going to pull to these big, because price, not gamma, but price is going to pull to these magnets. And it may get to these magnets and stick. But if there's things going on where that upset the volatility, it may lose its pinning, because these are like, they want to, the market makers want to pin gamma at these areas. They want to get it up here and pin it, because when it's pinned to these areas, the market is stable. But when things happen that upset the volatility, then it basically shakes it away from the pin, which is, we had President Trump talking about all the things that shakes it. They elected a pope today. That shakes it, right? He's American, yay. And then 1 o'clock, we got 30-year bond auction. That shakes it. You got these things happening all at one time. Things are, UK says they gonna buy a whole bunch of planes from Boeing or whatever. All the news, Bitcoin starts running crazy, and all these things shake the volatility, and it shakes loose. So if the market starts to get down into the red, if it starts getting down in here in the red area, then the market makers are like, okay, it's unstable down here. So they're going to try to do what they can do to bring it back to the flipping place. But sometimes when they're doing whatever it is they're doing, it's adding more fuel to the fire, and it can make it be even more unstable. But the desire is to bring it back to the flipping place. They're not trying to necessarily bring it positive. They're trying to bring it back to neutral, right? So they're always trying to bring it back neutral. So when we start looking at, do we want to get things up, where would we want to look at prices in the green area? This is what's going to help us with strike selection. Okay, so if you kind of have listened to me drone on, tune in. When we're looking at these green areas, where we want to look at for strikes, well, we want to get strikes beyond these big areas. So we want to get strikes up here. Well, if you start off at 1030 looking for strikes up here, there's going to be no money up here because it's too early. Because we're talking about 5740, 5750. This too early. Price was at 56 something. But as the day progresses, price climbs up here. So once price gets up to 5700 and gets up to 5725, that's when you start picking strikes at 5725 or 5730 or higher. Once the price has gotten up there, you see, if watching more gammas, you see it's probably not going to go any higher than this because there's no more gammas that, the range isn't any bigger up here, or there's no more big greens up here. Then you can say, okay, now I can start looking at strikes beyond these big lines because the green area isn't getting any bigger. Now the price does seem to pull back, but if you got call credit spreads up here, you don't care if the price pulls back. If we got call credit spreads beyond these big lines, you don't care if it pulls into the red. That's perfect, because if it pulls into the red, we'll just put on, we'll do our PDT hack to lock down our trades. It's when we're down here in the red where we're like, no, I don't want you to come and get me in the red. But if we're up above the green, then we don't really care, right? Now, what happens is initially when price is climbing up, right? When price is going up here, as it's climbing, Magic 8 Ball is saying it's an uptrend, and it is an uptrend. So Magic 8 Ball is suggesting put credit spreads because price is climbing up, right? That makes sense, right? Price is climbing, put credit spreads. Let's go with the trend, which we that's what we do. We trade with the trend. And if you're going to put on a put credit spread early on, and as it climbs, then you're going to lock it with your call credit. You're going to lock it with the PDT hack, then that's a good idea. But if we getting into 11:30, 12 o'clock or whatever, that means you need to go with the call credit spread first when it gets up in this area. So that way you don't care if it drops back down into the zone. So that's kind of where two thoughts are working at one time. You've got a put credit spread that says, okay, let's climb up a little bit and I'll ride with it and put on my PDT hack. But as it gets up here to these higher places, as it gets up to these high zones, then we put on our call credit spread, believing that it won't pass these, high places. And then those trades are safe if price drops back down. But you need to make sure that your put credit spread side is locked with your PDT hack. All right, so that you can work two trades at one time, but you need to make sure if you're working the climb side that you are locking it in. Like Lisa's got hers locked in a little late, like I got it locked in. Just in case it starts to fall back down, you at least have it, you've got your profits on the bottom side locked in. All right, especially on volatile days. Some of the days it goes up into the green and it stays up in here. Like now it tries to stay in here because it's pinned in the middle of all this stuff. But then this is 1150. Then something else happens as the day progresses and it drops back down below 5,700, which is what it started to do there. And you're like, well, shoot, if it drops back below 5,700, then my trade gonna be in trouble again. And what happened? It dropped right back below 5,700, and then the trade get in trouble. That's what happened. Okay, there we go. This drop is back below 5,700. This is 2 o'clock. Trade's doing fine as long as we're above 5,700. Once it dropped below 5,700 and got back to the flip place, then the trade gets potentially. And so when I say in trouble, if you don't have it locked in, then you're worried that it might get back into the red zone. And if it gets into the red zone, then you got to be worried that it's going to slip in there and can't get back out. All right. We'll keep managing it every day, but we're using all the pieces and parts to try to get us some good strikes that are far enough away that we can get 50, 60, 70, 80. We like them $90. Of course, if we get $90 in and we can PDT hack that, then that's really good because we got enough to work with on the hack. But we got to play it, you know, we got to work with the direction, especially in these volatile streets. We saw we had them huge swings today and yesterday. If it's going one direction, we don't got to worry about it. But if we're swinging back and forth from the trees, we got to manage it. So that's kind of where we are. I hope that helps us with gamma. All right. That's why I keep putting the gamma charts into our chat so we can see those. That helps. Hopefully that'll help guide you because it's helping to guide me. Okay, I got a thing somewhere. Y'all ready to look at some cash secure puts? I closed up Triple Q. Some of you may still be in it. I see that it's now down to 488. But I closed it earlier today. When it got up to 491, we were way past our stop loss. And I closed it earlier today for a loss of about $30 per contract. We took in $55 and we closed it for like 84, something like that. So we had a loss of about $30, which of course is not max loss. But it may end up being fine tomorrow. Don't know what the market's going to do tomorrow. This big drop from today may lead to continue downwards tomorrow because I really thought it was going to close above 5,700 today. I really thought it was going to do that. I thought the market maker was going to try to keep it above 5,700. All righty. Let's look at cash secured puts and covered calls. This is going to be
a big question.
Go ahead. Yep. Sorry.
So
Mr.
gamma
Mac, go
chart
ahead.
that you have here, is this something available on Thinkorswim?
Is what? What's that?
The gamma flow chart.
That gamma flow is in it's a part of Magic 8 Ball.
Oh, okay.
That's a part of Magic 8 Ball.
Okay.
Yep. There is one inside of, let me go find it. Inside of our Telegram, there was something, what was it called? Ooh, what was it called? Something with an S. Jared, you remember? S-O maybe? The other day it was something gamma. I put a free, Jared, you remember what it was?
Spot gamma.
There we go. Spot. S-P-O-T. Supposedly Spot Gamma is a free service. Here it is. It's a free service that you can use if you didn't have Magic 8 Ball. Magic 8 Ball is $25 a month, and I totally think it's worth it for all the stuff that you get.
Okay.
Inside of it, I think it's worth the $25. And I believe Magic 8 Ball, it's under Launch Pass. This is it. This is the Magic 8 Ball link if you wanted to get access to the Discord. That is not mine. It's Brian's. Again, it's $25 a month, and this gamma flow is here. There's also another gamma one. The GexBot stream is also in here. It's similar information, just laid out a little bit differently. It looks like this. And if you ever looked at GexBot, GexBot is a whole nother resource. That GexBot stream is also in here. So I'll sometimes flip back and forth between GexBot stream and the gamma flow so I can see them both. This one provides a little bit more data because it gives you the dots that tell you what was it a minute ago, 5 minutes, 10 minutes, 15 minutes, and 30 minutes ago. So this one tells you like where are the different dealers, where are they getting interested or where were they interested? this gives you that kind of information. The other one doesn't give you that information, but sometimes it's good to see like who's starting to get interested where, who might not have been before. So these are two resources that's inside of the Magic 8 Ball resource. And in here is also where you get the SPX suggestions and all the other stuff that's in here too.
Okay, right, thank you.
You're welcome. Okay, cool, good question. Anything else? Sorry, Mac, was that you, Mac, or Mr. Mac? Your hand is up.
Yes, ma'am. Hey, Coach.
Yep.
How you doing? How are you,
Good, how are
everybody?
you? Hey.
Hope everybody's well. I had a bad day today, and it's all right. It's part of it.
No, I'm
But I
sorry. to
gotta
hear that.
I'm trying to understand.
Okay.
You had said earlier in the day, you said I'm glad that my PDT hack didn't get picked up, and I was
Not
wondering why.
my I think I said my CCS. I was trying to get filled on a call credit spread. I thought I said CCS. I was trying to get filled on a call credit spread at 5705 or something like that.
Right.
And
That's
and
the
I was
same strike I got filled
I
at.
was glad that didn't get picked up because there was the same one where Nicole was breached, but it ended up being fine.
Yeah. I, oh
Did
my
you
goodness.
stay in yours or you got out?
It was terrible. I got out of it
You got
because I tried to hack it. And the
uh
problem, I got 4 questions on this whole thing.
okay.
I tried to hack that
Uh-huh.
5705,
Uh-huh.
5700, 5705.
Okay.
Okay, so I tried to hack it and
Uh-huh.
then it never got picked up. And the
Right.
price went down to like $2
Yeah.
on the hack side. I was just watching the price.
Uh-huh.
So in order to not suffer max loss, I said, okay,
Mm-hmm.
well, let me just lock in a price and just
Mm-hmm.
take my loss. Really
Mm-hmm.
wasn't loss because I had one earlier, but I'm gonna leave it
Uh-huh.
alone. Okay.
Gotcha.
So first question
Mm-hmm.
is it better to lock in the hack as a loss, or is it better to just close it at a loss? Or is it just depending on what the price of the hack will be?
Well, I think locking in the loss versus the hack as a loss is the same thing money wise.
Okay.
The only difference between the two is one of them you're going to use a day trade and one of them you are not. So
Okay.
that's really the only difference. If you're locking in a loss, you're still going to be losing the money. It's just, are you going to lose the money and a day trade or just lose the money?
Okay. Perfect. Okay.
Okay.
That's good to know.
Mm-hmm.
The second one is on the I don't know why I do this. I get my account up to a certain level, and the
Mm-hmm.
level is $10,000. I don't
Mm-hmm.
know. I get to 10,000 and I don't know what it is. I always do something crazy to then take my account back down. And
Yep.
I don't know if it's just a psychological thing
Mm-hmm.
or
Mm-hmm.
what, to get past this
Mm-hmm.
level,
Mm-hmm.
to move past it and to make good
Mm-hmm.
decisions. Like I make great decisions up until I get to that level, my
Mm-hmm.
account get to that level, and then all of a sudden I make
Mm-hmm.
a just like today.
Mm-hmm.
So it was a dumb decision um to take the loss. I should have waited. That was the first thing. And then I said, instead of just taking that loss and waiting, I did another PCS. And again,
Mm.
that last 15 minutes, as you've already said, did not
Yes.
see that coming. I
Right.
thought I would just lose at the 5705,
Yep.
wasn't bad.
Yep.
But then it dropped
Yeah.
so fast, so
Yes.
tremendously
Yes.
that I didn't even hack that one
They even had
because I
time.
just thought it was going to be great. I just
Yeah.
all the way up until the last 15 minutes.
Yep. 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 I get it. So to answer the question about the thing with the $10,000, it's definitely a psychology thing. And I see somebody in the chat, I think it's TJ saying me too. What I'm going to tell you is what I'm having to tell myself. Okay. The same thing that gets us to the 10K has to keep us past the 10K. So I'm having to tell myself, and I'll give you the same advice I give me, because I feel like the stuff I tell me is the same stuff. It's for me, it's for y'all. That if I was doing 4 contracts to get here, then once I reach the mark, I still got to do 4 contracts until I'm over the hump. Once I'm over the hump comfortably, then I may be able to go up to 5 contracts. Because I'd be ready to scale up quick. I'd be ready to scale up. But my mentor says I have to scale up only after I've done a certain number of these trades successfully. And that number has to be like, I've done 10 successful trades. 10 successful in a row, or I've got, 15 successful in a row. It has to be some number. And then after I've been successful a certain number of times, then I can scale up to the next set of contracts. For me, I'm like, oh, this went well for 3 or 4 good days. I'm ready to jump to the next scale up. And he's like, nope, you scaling up too quick. Right? So whatever it takes to get you to the $10,000, us, I'm putting us, when I say you, I mean us. Please, Mr. Mack, don't think I'm just saying you, I'm us. Whatever it takes to get us to it is what we got to keep riding to keep us through it. And not just the contracts, but whatever thought processes that we're using, we've got to keep using those same thought processes, because honestly, we have to be even more diligent when we start putting more, when we got more at stake. You have to be even more diligent. So where before, maybe when you got 1 to 2 contracts, you could maybe do your, our liberation, and we could ride to the end, let it go all day. But when you got, you start putting $2,000 and $3,000 and $4,000 into a trade, then now you need to hack your way out. You need to lock down some of that money. We'd rather lock down $50 per contract at 4 contracts than to keep 2 contracts riding all the way. We need to be even more diligent with the rules, whether our rules are, if it touches my leg, I'm closing and I'll just reposition, whether I'm hacking at $50, regardless of how far it is away. Because today I was like, I had 5,600. There's no way it's coming back down to that. And it didn't, but still I was like, I'm gonna hack it for 495. If it picks this up, then I'm gonna be done with it. I'll have my money to go do whatever else with it. I do nothing else with it, but I still had the money. But we have to be even more disciplined with our rules as we start to grow the account, because we're really looking at how do we scale it past 10K and 12K and 15 and up to 25, where we don't care whether it's a day trade either. We're not there yet, but we're getting there though. So that was kind of a long answer. But yeah, the same thing that takes us to get there, whether that's contracts, whether that's the mentality, our discipline has to even tighten up, has to be even tighter when we're putting more and more on, because when we scale up, we don't have that fluff anymore. When you put $10,000 and $15,000 on a trade, you don't have room for foolishness. We don't have
Yeah,
room.
I
We don't
could
have
say
room
that.
for decisions.
I
Go
could say
ahead,
the
Tori.
same thing.
Mhm.
We're all in the same boat. I know
Mhm.
with me, especially when you have win after win after win, and you feel like, okay, I got this. And then you think about things that happened previous, like, okay, I jumped out of the trade because it was going up, in reverse, and then it turns back around. You'd be like, dog, I should have stayed in it. So
Right.
then the next day you do that, and then
Yep.
it goes against you. So it's
Yep.
kind of like you start trying to outthink the market instead of
Yeah.
going with the market and sticking
Yeah.
to your trades,
Right.
your trading plan. So I
Yeah.
know I get stuck like that.
Yeah.
So every time I get to 5K, and I'm all big headed. The next thing you know, you'd be like, "Boom!" Like, sit your behind down somewhere, girl.
Right. Totally get it. Totally get it. I totally get it. Yes, I do. Yep.
Thanks, everybody. I
You should.
appreciate it.
What were your other 2 questions? Because you had 4 questions.
No, it was wrapped up in that
It
first
was
one
all in there.
as I
Okay.
looked at it again, and then the second one.
Mm-hmm.
Uh, But yes, ma'am, that ended it. Thanks a lot.
Sure, sure. Now, listen, I want to say not just to Mr. Mack, but to everybody, as I want us to be, we're training and we're learning to stand on our own. No problem. I think I want us to all feel independent as we go. But even in the midst of our independence, there's nothing wrong at all with sending a message in this group and say, what do you think about? That means you've thought about it, you've looked at all these things, and then you put a message in the group that says, Arlissa, what do you think about blank to blank to blank? And let's talk about it because you might say, okay, I'm 57, because even Nicole, I'm not my 57. I didn't even know anybody was in that trade. And then when she said she was in 5705, it was like, okay, so now I start looking at it. So then now I'm looking at it because I didn't think anybody was even in it. But as I start looking at it, then I'm watching to say, okay, Nicole, you might have a chance now. Because if I didn't think anybody was in it, I wouldn't have been watching to see what should you do. As you see, I offered the steps as to what are your options. I wouldn't have even known to even talk about any options if somebody didn't say. But if you say I'm there, see, but you see, one of the suggestions I gave her was not to go get a PCS to balance that, because I didn't know that a PCS was going to be a good option because I didn't get into another one. I kept looking through the day to see would a put credit spread be good, but the price kept coming back down and bouncing, and I never did get into another put credit spread because I couldn't trust that it was going to stay up there. But my point there is to say, if you start looking at some different thoughts and you start thinking about some other stuff, then that's when you put something in the chat. Because what would have been a good trade, Mr. Mack, and not just Mr. Mack, but whoever else, what would have been a good trade would have been to go higher on the call credit spread side. Instead of, when you're looking at the chart, you say, okay, now looks like my call credit spread is going to be breached, but I do see that there's the green up here is drying up. You're like, well, the green up here is really drying up. Then let me go higher. Let's go higher than the green and put on some more trades up here where things are safer up top versus the bottom, because it did keep pulling back. So now it would have taken more money. You got to put more money into the trade, but then you say, okay, I'll put more money up here. So if this doesn't go well, if it does go well, then these both are going to be fine. But if this doesn't go well, then I've got more money that I've collected up even higher. You know what I mean? So I'm trying to see where we were from a time standpoint. This is like one something right here. This is where you say, okay, well, price is kind of climbing up in here. Let me go higher. Let me go higher than the big bars and let me put some trades on up here, 57.40. I think Jared, asked about 57.25, and I think I replied back and said I wouldn't get any closer than 57.35 or 57.40 because that's where the big bars were. I said get beyond that. That would have been some extra trades you could have put on the other side of the big bars instead of getting on this side down here, which is where price kind of kept falling back down here anyway. It wasn't pinning up here very well.
Now I did that the other day and saved a couple of trades that I was doing the other day. But again, today that last 15 minutes,
Yes,
that's
yes.
just crazy.
True. But if you had some more call credit spreads, it wouldn't have mattered
Yeah.
if it tanked.
That's true.
Of course, hindsight is 2020. We can look after the fact going, you should have, and I don't want it to sound like that.
Oh no.
But I'm just saying that when we're looking at the big green wall like this, anything beyond this big green wall may be a safer trade. And once the price gets up here, then there would be premiums higher. If the price is down here, then there wouldn't be no premiums up at 57.40 and 45. But once price has climbed up to 57.20, then you can get stuff at 57.40 and 57.45 and 57.50 because it's close enough now where there's premiums.
If I could add, I want to say there is a family unit in this group, and I do appreciate that. And there's something to be said about saying you're in a trade and you don't know where it's going to go, and you open it up to the community, and for some reason it works out. I can't tell you, I've seen it happen. Whereas if we die on a sword silently and alone, we end up doing that. And I just have to say, and y'all be like, maybe she ain't take that many trades. That's fine. But the point is,
Yeah.
I see it. I see
Yeah.
it for myself. And I see that the community locks in. And there's something to be said about, at the last minute, hey, I need help, or
Yeah.
another set of eyes. Whereas when we die on a sword by ourselves, and we
Yeah,
really
yeah.
are coping by ourselves. All I'm
Yeah.
gonna say is that I've seen it work out when somebody said, "Don't let it go below this," and it worked out. It really has. So just something to offer up, because I
Yeah.
think we're covered. I really do feel like this community is covered. So there's something to be said that we're all gonna be looking out for that trade.
That's right. That's right. That's right. And again, I want y'all to feel comfortable, commenting in the chat. I'm honestly, I'm definitely never gonna be like, I can't believe you, because I've made some dumb trade decisions in my day, and sometimes still make them. It's my desire to be transparent with you all that keeps me, a lot of times keeps me from getting into dumb stuff, and when I do, it makes me come back to you all and say, oh, by the way, because sometimes I'm like you, I'm sometimes the lone soldier, like, what about this? Let's just try this one, and then I look back like that wasn't the best move. But I'm doing better and better every day, every trade, getting better. All right. Let's run through this cash secure puts, because I want to make sure that as I'm putting information in the chat, and I want cash, we spend a lot of time on SPX, and I'm grateful for what it is generating for us. But I also want us to make sure that we are staying focused on acquiring assets. That is one of the things, y'all hear me mentioning it regularly. I want us to continue to acquire assets, whether that's you taking your option money and dollar cost averaging yourself into some stocks, and hopefully you all are already doing that you're every day you're buying something, or every week, or however you're doing it. But just know, we do want to capture the money off of options, but we also need to acquire assets where we've got some low cost stocks that we like, or middle cost, whatever it is. If you can buy, Nvidia, Amazon, whatever it is, be buying some stuff along the way at $5 and $10 and $15 a day, a week, a month, or whatever, but be acquiring assets. That's what we can transfer to our children. We can't transfer options contracts to them, but we can leave them stocks. All right. So that's where the generational wealth is going to be passed on. It has to come in shares. So we've got to acquire them. We don't talk about it a lot, but it's where we have to do that. Okay. We have to do that. Buy a little bit along the way, and let's be able to agree with that. Rhonda said, I agree with Janae. We are a community that helps each other and encourages each other. Absolutely. This is a family. This is a family here for sure. Okay, what are cash secure puts? Cash secure puts are a bullish and neutral strategy. I call it a no-lose strategy because you're either going to win with premiums, or you're going to win with premiums and you're going to get shares. When you enter a cash secure put, you're basically selling puts. This is a seller strategy. You're selling puts. And you can use this to either acquire shares at a lower price, or you can use it to just generate income. I like to use it to acquire shares at cheaper prices, but some people use it just to use it for income. But you should only use it for stocks that you want to own, or you don't mind owning. Don't do it just for the income, because you could potentially end up with stocks that you don't want. And if they tank and you end up with something you don't like, then that's a problem. Like we've got Rigetti, we've got Soundhound, we've got Big Bear AI, we've got QUBT, we've got, what else do I have? Big Bear AI, Rigetti, Wolf. I've got Wolf. These are all stocks that I don't mind owning. I'm okay with owning. Big Bear AI, Wolf, QUBT is over in my Robinhood account. APLD, Serve, those are over in my Robinhood account. But those are the stocks I'm looking at, right? I think Archer, ACHR I don't have that one, but it is one that keeps being brought up. I think it's the like air taxi or something like that. I think what's the lady's name? Not Nancy Pelosi. Is it Nancy Pelosi? Is now involved in Archer. So that one seems to keep being brought up a bunch. But these are the stocks. But you want to have some stocks that you don't like and don't mind owning, right? You're going to capitalize. Oh yes, Nancy Pelosi. You want to capitalize off the bullish movement of a stock as a seller. Okay. How do we sell puts? We're going to select a strike that's either at or below the current price. We were talking about Wolf the other day. I think we talked about Wolf. We know I talked about something else. We can do it. I'm going to show some examples here in a minute. The collateral required is the strike price times the 100 shares. I'm going to say minus the strike price times 100 shares. I was looking here. Let's put Wolf on the screen.
They had
Make
earnings.
this big so we can see. Wolf had earnings today?
Yup, and SoundHound.
Oh yeah, Wolf dropped 350. They had their earnings don't look like it went all that great. Let's see how did SoundHound earnings? They needed to do well. Yeah, Wolf looks like it dropped about $1. And SoundHound, I think WULF has earnings tomorrow. Yeah, SoundHound dropped about 50 cents, looks like. Let me take this off of, maybe I'll use Big Bear AI as a good example because it did not have earnings and it's just hanging around in a zone. And we're going to be able to use it as earnings. As a single. Okay. So we're looking at Big Bear AI. If you're looking, let's use next Friday as our example. We would look to sell a put. So we're in the puts side. We're looking in the bid column. I'm on next Friday's expiration. You see, I already have a position here, but I'm looking at the 3 strike and you're going to collect $10. Or you could do the 3.5 strike and collect 40. Remember, I was talking about doing the offensive where you go to a strike that's in the money and you could collect more. You collect $30 more by going up to 3.5. The price is $3.25, right? And you can collect $30 more if you end up getting assigned by next Friday. You made up the difference between these two, but I don't want to get too deep into why to pick offensive 3.5 or why to pick in the money versus out of the money. But you do want to get a strike that's at or below current price. And you're going to select in the bid column. So that way you can collect a premium. You're going to collect a premium as you enter this trade. So let's say you do the 3 strike. The 3 strike times 100 shares means you're using $300 of collateral minus the $10 that you collected in premiums. So you're really using $290 of collateral to do this Big Bear AI trade. And what you need the price to expire above $3 in order for you to not acquire the shares. Okay, if it does expire below $3, you're going to acquire 100 shares at the $3 mark because that's the strike price you chose. You're going to get your shares at the $3 strike price. If the price is above $3, they're going to release your buying power to you. You still going to keep the $10 that they gave you for premiums, and you go on about your day and you go to next week or whenever, right? Okay, you're going to sell at a strike at or below current price. Collateral is your strike price times 100. You win the trade if the price is above your strike at expiration. You can do this in a cash account if you have a cash account. If the price is below your strike, then 100 shares is going to be put into your account. Okay, where this is useful is, for example, I had Big Bear AI. And I had a cost basis of $4 and some change. So let's say I had a cost basis of $4.03 was my average cost. That's an example. I was for something, right? If I was selling a put at 350 and I got assigned another 100 shares, now I get 100 more shares and it brings my average cost down. It brought it down to like 370 something. It became my average cost because I acquired shares at a lower cost than what I had. The $4 ones, I got some more at 350. Now my average comes down. Make sense? This is what you do if you want to bring the average down. I think I talked about that a little bit in the post in our Telegram group. I talked about why you would potentially do that. Lisa says, I'm in Wolf 450 that expires tomorrow. So I'll get 100 shares below 450. So if you have the 450 strike, you're going to get 100 shares. If it's below 450 tomorrow at expiration, it has to be at expiration, then you will receive 100 shares at $4.50. If you don't want the 100 shares, let's say you're in there and you say, I don't want the 100 shares. You can be like me. I think I have a position. I think I have Wolf down here as well. Talking about Wolf. I have a 4 put for tomorrow. See here at the bottom? I've got a 4 put for tomorrow. If I did not want the shares, I could say, well, so if it expires below $4, which currently is at 360, if it expires below $4, then I'm going to get 100 shares at $4 each. Okay, whatever strike price you chose is the strike price you're going to receive them. It doesn't matter what they're worth at the time. It matters what you said you were going to do your options contract at. That means you would collect them at $4 each. If I decide I don't really want them, let's say you decide, Lisa, you don't really want them shares. You say, I don't really want them. Okay, then what you could do is you can right click on this, you can pick this and you can right click it and create your closing order and you can buy your way back out. You can buy your way out and say, I didn't really want the shares. I can just buy to close. As long as you close it before the market expires, before the market closes on expiration day, as long as I close this or buy to close before the market closes tomorrow, then I will not receive the shares. If you don't want them, you can say, nope, I don't think I want these 100 shares. I can buy my way out and then I won't have to get the shares. You're only going to get them if you stay in the trade till expiration, till after expiration. That's not for Lisa, that's for anybody. That's for Wolf, that's for Big Bear AI, that's for whosoever. Oh, Rigetti's coming up. It was $9 this morning. Okay. All righty. Anytime
think I
you
should keep them, Alyssa, or try to sell them out?
I think you should. I'm keeping mine. I believe
Okay.
in Wolf longer term. So I believe Wolf is going to come on and do its good work. That's why you see I have 2 cash secure puts on it. So I'm willing to accept them at this price. Of course, I can't tell you what you should do, but I'm saying,
Okay.
yeah, I'm gonna try to keep mine.
Say no more.
Okay. Okay. I'm gonna try to keep mine, trying to manage nobody's pockets. Okay. There we go with that. What's our next screen say? The pros to selling cash secure puts. It is very passive. Basically, you enter, you sell your put, collect your money, and let it run to expiration. They do not have to be watched, especially if you're working with a stock that you don't mind owning and you pick a strike price that you're okay with. If you are just doing it for the income, you might watch it a little bit more. But if you're working with a stock that you want to own, let it just run till expiration. Maybe check on it. You don't have to ignore it, but it's very, very passive. The biggest piece of doing cash secure puts is they can require a good little bit of collateral, because I was just talking about if you've got, a 4 strike, that's going to require $400. You got a 5 strike, that's gonna require $500 of collateral. You got a 9 strike, then that requires $900 of collateral minus whatever you take in premiums, right? This is where it gets interesting. A 15 strike requires $1,500 of collateral. So that's where it can get expensive. That's probably the major drawback to selling puts. Or if the stock tanks really bad, you're going to be holding shares of stock at a price that you may not want, which I think happened to some of us. I think TJ and me both on SoundHound. I have SoundHound in the $15, it might be $12 range right now, and it's not worth that right now. I've got QUBT at something like that, and it's not worth what I have it at. So I'm holding shares of something that's not worth what I paid for it. But you know, I think we could probably look at a few things like the car you're driving probably is not worth what you paid for it. And if you were to, you know, we won't talk about that. It ain't worth it. The conversation, that'll take me down a rabbit hole. You still own it though. It's yours and you own it. Your shares, you own them until you don't. You own them till you sell them. And when you decide to sell it or your car or whatever, that's going to be completely up to you. But you own it until you decide you're going to get rid of it. Melissa says, then you sell covered calls after you get assigned. Yes, absolutely. Absolutely. This one thing I like about cash secure puts, and this probably applies to a lot of people. It's a great use of the money that you have just sitting in your portfolio. You can sell cash secure puts inside of your 401k mostly, depending on what company you're working with. Inside of your IRA, you can sell cash secure puts. And you got some places where you got money just sitting that's not being put to use. Put that money onto some cash secure puts. Maybe pick some stock that you really do like. Maybe you got something, maybe you're a fan of AMD. Maybe you're a fan of NVIDIA. It's what, $100 and something right now? If for $100, right, times 100 shares, for what kind of collateral would that require? That's going to require what, $10,000 of collateral for each options contract for selling a put. May or may not want to use your money like that. But if your money's just sitting there and you're not using it for something, it can just be passively generating resources for you while the money's just sitting. All right. So that's just a thought. Pick a stock you like, maybe a $30 or $40 stock that you like, PayPal or Affirm or some of those pharmaceuticals, maybe Hims and Hers, something that you like, and go with that. I'm going to go here in a minute and show you where we can go look to find some stocks that may be good on the cash secure put list, where you can go look and see what you might want to do with it. All right. Those will be those are the pros. It can be using money that's just sitting. All right. And you win in a whole bunch of situations. If and when you get assigned the shares, or you already have shares, then you can sell covered calls on them. Selling calls is a bearish or a neutral position. You need to have 100 shares or at least 100 shares in order to sell covered calls. Each covered call contract is for 100 shares. You can collect premiums while you're doing that. You select a strike above current price and above your cost basis. So for example, I have, let's say I have SoFi shares. My SoFi shares, current price of SoFi is what, $12 and some change. I'm just going to say $12.50. I don't know if that's the current price, but let's say that it is. $12.50 is current price, right? But my cost basis on SoFi is $14. 14 and some change. This is my average cost on my SoFi shares. If I'm going to sell covered calls, I've got to sell covered calls above $14. I can't just sell covered calls above $12.50 because that's not above my average cost. I've got to get above my average cost. So 14 or higher. I can go with $14.50, 15. I got to go higher than my average. Otherwise, if for some magical reason, SoFi just pops overnight while my trade is on, it could pop through my average cost and I could potentially lose my shares for less than what I paid for them. And that's not what we want to do. We want to at least break even or make some money on them. If you really want your shares to keep them longer term, you definitely need to get above your cost basis. But if you just hold them and you're cool, I'm just trying to break even. If you're just trying to break even, you definitely need to be at your cost basis or your average or higher. All right, make sense? All right, select a strike above your current price and above your cost basis. It needs to be above both of those. Price needs to expire below your strike price in order for you to keep your premium and keep your shares. So let's say I was doing this SoFi trade and I had the 4.5 strike on my covered call. Okay, let's say I had the 4.5 strike. That means the price needs to expire below 4.5 in order for me to keep my premiums that I collected and to keep my shares of SoFi. If price expires above this 14.51 or higher, it can be literally a penny, 14.51 or higher, then I'm going to still keep the premiums, but they're going to call my shares away at this price. It doesn't matter what it goes up to. SoFi can run up to $20, $30. It don't even matter. They're going to pay you $14.50. If you said, I'm willing to sell them, I'm selling a covered call at $14.50, then if you're still in that trade at expiration, then they're going to sell them to whosoever for $14.50. And if you don't want them to go at that price, then you have to buy your way back out. Okay, if you don't want them to go at that price, you got to buy yourself out. Let me see. I got a covered call here. For example, I've got Rigetti. See, I've got these calls over here for Rigetti. Tomorrow, I've got Rigetti for the $12 covered call Rigetti. Right now, Rigetti is at $10.31. So as of today, right, my covered call is fine. Well, it closed today because I had it set to close for $2 and it did. I have another one set for next week, a 12 call again. If this goes past $12, I'm going to release, if I don't close it, I would release my shares back to the market at $12. Notice, what is my cost basis? Y'all see my average? This says trade. This is my average cost. So I own them for $12. If I allow them to be pulled away for $12, I'm going to break even. But I'm selling my covered call at $12 because the current price is at $10, right? And so I was putting them at 12 so I could at least pull in some type of premiums. But when price gets back into the $12 range or gets closer to striking distance, then I'll need to move these prices up so that way, if they get called away, I'll at least make a profit off my shares. If I release them, I kind of want to keep my Rigetti shares, right? I think I might have a Big Bear AI covered call as well. Let me erase some of this stuff so it don't get too crowded on here and y'all can't see. But like I have a Big Bear covered call. That one closed today too. For next week, I have it at the 3 strike, a 3.5 covered call. If I let these go away, 3.5, my current cost basis is 3.5. So if I let us, 2 contracts of this go, that means I'm going to be releasing 200 shares back to the market at the same price I bought them for. Okay, so my options are, I can either close this trade if I think it's going to go through, or I can release them back and just break even. But I have one back also May 16th. I have a 4 covered call, which means this one won't be called away until it reaches or passes the $4 mark, which is better. But since Big Bear AI has been hovering between 3 and 350, it don't seem to want to push through there. My 350 is working for me. And I'm also selling a cash secure put in the $3 range. So that way I can bring this cost basis down just a little bit more. and bring my cost basis down below 350 so that when I start selling covered calls at 350, I'm gonna be profitable. Okay. All righty. Anybody got questions so far? When do we sell covered calls? We sell covered calls when you have 100 shares of something and you just want to break even. Like I got 100 shares of this stuff and I'm just trying to break even, or you want to profit. That's when you would sell covered calls. When you have 100 shares that are slowly rising and you want to make profits along the way, but you don't want to lose them, but you want to make money from the asset, then you want to be a little further away as far as your strike price, but you still want to make money from your asset, then you sell covered calls. You can trade the wheel strategy, which is just doing it for income. That works. If you have dividend stocks, you can sell covered calls to get premiums and pull a dividend off them same stocks. If you got 100 shares of something, you can sell covered calls against it, pull a dividend, and pull covered call premiums off them same stocks. You can also sell covered calls against leaps. If you got long positions, maybe out into 2026 or 2027, you want to make some money off of those, you can also sell covered calls against those. Just know, you can do covered calls in these accounts, but you have to do a covered call in the same place where the shares are. All right. You can't have the shares over in your IRA and be selling a covered call in your margin account. They have to be in the same place. And the reason is, if they get called away, the broker needs to know where to call them from. Okay, so they can't be in different places. The broker won't even let it go. Sometimes people are like, I can't even get it to lock in. And it's because they're not in the same place. Notice here, right here in my margin account, I've got 400 shares of Big Bear AI. I'm also selling 3 contracts of covered calls, right? So right here in the same place where these shares are is where I'm selling covered calls. Rigetti, I got 200 shares right here, and I'm also doing 2 covered calls. The shares and the covered calls have to be in the same place. The leap and the covered call have to be in the same place. You can't have one in the cash account and then be doing something in the margin. They got to be in the same account in order for this to work. All right. Don't try to be in multiple places doing that, because the broker won't let it happen. Then you'll be frustrated going, why can't you? Alyssa told me I could, and you can. You just got to do them. They got to be in the same place. All right. How do we sell? Let me make sure. Okay, I got that. Let's go back to this screen here. You're gonna pick a strike price at or above your cost basis. Use the bid column. Collect your premiums. The money is opposite of buying. Basically, you want to sell high and buy back low. You win the trade as long as the stock price is below your strike. You can buy to close at any time. You don't have to stay in there and lose your shares if you don't want to. You can buy your way out. This can be done in a cash account as long as the shares are in the same place. The pros, it's a great way to profit from your shares. It's a very passive strategy again. The cons is your shares can be in danger if the price expires beyond your strike price. You can buy to close to avoid that. Okay, this is the wheel strategy. Basically, sell cash secure puts. You get assigned, sell covered calls, you get exercised, sell cash secure puts. Don't. You just keep going with the wheel. All righty. All righty. Questions? Preguntas? Jared, I'm coming to you next. I hope you're still here.
Yep, still here, coach.
Cool. All right. Questions about covered calls and cash secure puts? Oh, before I go there, I wanted to make sure we go look at the place to go find what you're looking for. Go to barchart.com. Bar chart is where you can go and find, and there's probably other places, bar chart. Am I not? Bar chart, there we go, barchart.com. I'm sure there's other places to go look for cash secure puts. I like bar chart, it's free. How does the leap process work? I buy a leap and sell a contract at the same time. So you buy the leap, whatever your strike price is on that leap, you got to be at or above that strike price to sell your call. So you're buying a call, your leap needs to be a call, and then you can sell a call on a closer date, right? Your leap is probably going to be out in time, but you selling your call from week to week. You can do that. Some people buy a leap on SPY, which is very expensive, and sell calls against it during the week. That is an expensive endeavor, but people do lots of things. You're welcome. If you need to be more specific, we can get more specific, Lynette. Okay, under bar chart, go under options, right here at the top where it says options, go there. And where it says income strategies, you see income strategies is here. You've got naked put and covered call. If you're looking for cash secure put, that's called a naked put. So you can select that naked put. And then what will populate is a list of cash secure put ideas. Cash secure put ideas. Sooner or later, it will populate. Now, if you, bar chart is a free tool. It can be, you can pay, I think it's $1.99 a year. I paid for it before, but I didn't use it anywhere near enough. So I canceled that and I just use it for free when I need stuff like this. But there's so many other places to find this information that I don't need to pay for it. Right, but you're here looking at the naked put option screener. See if I can make it any bigger. Barchart.com is where we are. Okay, I'm here. Can you make this bigger? There we go. Barchart.com. And then you can do it by strike price, depending on how much money you're looking to spend. You know, you can do it by strike price. I'll do it from lowest to highest. Some of the ones we were just talking about is Wolf, APLD, looks like Hertz is here, EOSE we used to, Clean Spark is here, Riot, Rigetti, QBTS, which is in the quantum space, Sedge, I forgot what they do, ASTS X, which is Twitter, right? Is X Twitter or is that somebody else? Or this X Steel, I think that's Steel. And then Hims is here for $45. So 45. So if you were using, if let's say you were doing Hims, you decided that you had a few more dollars and you were interested, Abercrombie is and Fitch is also here. Let's say you were doing Hims, 45 put. They give us an expiration date, but you don't have to do the same. They do it by the month. You don't have to go with this same expiration date. Current price is $51. They're suggesting a $45 put. So 45, how much money are we going to need if we decide we're going to do Hims? How much money will you need?
$450?
Almost. Times 100. Need one more zero.
Oh, 4,000. I'm sorry.
Yep. You were close though. Appreciate you for jumping out there. $4,500 of collateral. And according to this, you're going to take in $365 in premiums. So that's going to be good premiums for your $4,500, right? You're going to receive a premium of $365 for putting up your 4,500. And what you need is the price to expire higher than 45. As long as price expires above $45, you get to keep all of this. And if it expires below 45, you're going to be given 100 shares of HIMS at $45 per share. Okay, they've got other choices like Rigetti, they're suggesting the 9 strike. APLD suggesting the 5 strike. Wolf, the 3.5 or the 4 strike. This is a good place to do a list. So now what I do here when I'm here, I take and look, if I was just looking for, where could I find one that I liked? I look at this little cross next to it. Let's say I'll pick next to Wolf, and I look to see what's the trend, or who are those people called? The people who decide whether you should do something or not. Oh goodness, the name just jumped out of my head. Analysts. What do the analysts feel about it? Well, under opinion, it says here that Wolf is a sell. Wolf is a sell. I look for something that is neutral. I try to find neutral or a buy, right? If I'm starting a position for the first time, I look for neutral or buy, because you don't want it to be necessarily to be sale, because you kind of don't want the price to be going down. You want the price to be going up, since selling a put is a neutral or bullish move. I click that cross, and then I pick opinion. This one is a strong sell. It means all the analysts said, and they don't tell you how many analysts. Short-term indicator, 50% sale. Medium term, 100%. Long-term, 50% sale. Means its current direction is weakening. 72% of the analysts say sale. Okay, so you would look and see. Let's see what they say about HIMS. And then we're going to move on. I want to make sure we can get to Jared's question about his chart. HIMS is on a buy. The analysts all say short term is hold, medium term buy, long term buy. If you were starting a position in HIMS, this might be a place. Now, HIMS are going to be a little more expensive, but this is one of those places where if you've got money just sitting, not doing anything, and you've got a desire to grow a position in HIMS, or you got some long-term, positive vibes about it, then you maybe use some of your money for that. This is Riot. Riot says sale. All right, this is where we go. And if you're here and you say, okay, well, I looked at the cash secure puts. Let's see, maybe I just want to go straight to covered calls. Maybe I just want to buy my 100 shares outright and not go through the cash secure put process. I just want to go straight to buying shares. Then I picked options and covered calls, and you got a list whenever it populates of just covered call options, covered call suggestions, also on bar chart for the free. Maybe. This is just covered calls. If you have the shares or you want the shares, then you can just buy them and sell covered calls against them. SoundHound is here at the 12 calls. Current price of SoundHound looks like it's $9.74 the last time they checked. Big Bear AI is here. QBTS, Fingerhut, which I didn't think was still anything. GameStop is here. GameStop is $26. Did y'all know that? I did not. TMC.
Where's AMC?
It ain't on here. Oklo is on here. AMC is not on the list. We were trading AMC good and proper, boy. We were riding AMC to the bank. 270. It was stuck around $3 or $4. Not there anymore. It just hovers. All right. Okay, so I've covered all of the covered calls and cash secure puts. I wanted to do that. All righty. Jared was asking about getting the same things on his chart that are on mine. So Jared, you want it on Trading View or on Thinkorswim?
I'm using Trading View right now mainly.
Then let's go look at Trading View. All right. Trading View, the things I have, do you have the one of the paid versions?
The what, I'm sorry?
Do you have the paid version?
Yes, I'm on a free trial right now, but I am paying for it.
Okay. So what I have over here is you might not want the Strat Assistant because I'm not sure if you're one who's interested in the Strat, but I have the EMAs. I'm going to go over here and grab exactly what I have so we can put it into the chat and you can see exactly what I have on mine. Okay. Come on. And then we'll go through the steps of how do we put them in here. Where are you? Oh, there you are. Okay. Somebody's drawing on the screen. Hey there. Okay. So when we're on, okay, the first one we're going to look at, important, VWAP. Okay, go under indicators. This is for everybody else who's looking for the same stuff on their screens. Okay, type in VWAP. VWAP, and I went with this first one, volume weighted average price, just the first one that pops up. You see there's a whole bunch of choices. I didn't want any of those. I wanted the plain Jane volume weighted average price. Okay. Now, once you have VWAP, I made my screen bigger and now it don't want to get small again. So I can get to the beginning, Come on. Oh, there we go. Okay, so under VWAP, go to the gear shift thingy over here and click settings. I have it under session. And the regular source, I didn't change anything. Whatever this one, oh goodness, whatever that one was, I left it. La la la. Lord of mercy. Help. Help. I'm trying to get this back to the right size screen. Okay. Oh, no. What'd you do? Reset. Pew. No. Okay. Oh, there it is. Thank you. Under the little gear shift session, I didn't change source. It was H plus L plus something. I didn't do anything to this.
Okay.
0, standard. I checked all 3 bands for the multiplier. This is something I did change though, and this is based on what TJ taught me. I changed this first one here to 1.3. Instead of 1, I made it 1.3. And that's because there's more information or more price action that will be caught inside of that first band. Gives you a little more oomph, basically, that says more of the prices will close between bands, the top band 1 and the bottom band 1.
Okay.
Okay,
Did you leave didn't you leave the second one alone, just 2?
I left it as 2, and the third one I left it as 3.
Okay, gotcha.
Okay, and time frame I left it as chart, or if it's not chart, I made it chart. Inputs on the, and those, I checked these 2 bottom boxes at the bottom. Wait for time frame close, and then inputs in status line.
All right, got it.
So do click style there. Now
Mhm.
these colors and stuff are gonna kind of be up to you. I made my upper and lower bands the same color. So I made upper and lower 1 green, upper and lower 2 orange, upper and lower 3 red. That to me let me know that the green, yellow, and red mean red was like the outer bounds. And I made my VWAP blue. Whatever you're comfortable with your colors, make sure that you stick with what you're comfortable with. But I clicked, notice I have all of these are selected.
Yep.
Labels on the price scale, I click that, and I click values on the status line. I have everything on this page selected.
Okay.
And then on visibility, I left all this together too. I didn't bother anything back here.
Okay.
Okay.
Yeah, that was the big thing with VWAP. I could never get it to populate, and then after I was playing with it, I finally got it today. And yeah, that helps out with those metrics.
Make sure too, Jared, when you when you put in SPX, notice there's all these different SPXs.
Yes.
Pick that first one, the one that says SP over here to the right. Because if you pick the other SPXs, they don't show VWAP.
Okay. And that was another thing. I think that's what I changed too, is I finally found the one that was showing volume, because when it said I was on one of those other ones and it said volume is not available for this.
Yep. When I put in SPX, this top one, the one that SP is at the top, that's the only one. It says S&P 500. That's the only one that shows the volume.
Gotcha.
The other ones don't show VWAP, don't show it. And we need it. We need my VWAP. So the moving averages, you're cool with those? We need to go through those too.
No, I can get those pretty well, I believe.
Okay. I also use the pivots. I'm not sure if you've used those, but pivots, it's these there's pivot. They're basically support and resistance lines. You can see them. They're light yellow. You probably have to lean in unless you're looking at your computer. But you see
Yeah.
these yellow?
Uh-huh.
Yep, these yellow lines. There's a pivot. The black is the pivot line. Basically, it's almost like a flipping place for the day. And then there's resistance 1, resistance 2, resistance 3, and then there's support 1, 2, and 3. So if it's above the pivot, it's almost another type of VWAP, but it's not based on, VWAP is based on volume. And this pivot formula is not that same pivot formula, but the zones sometimes respect these pivots. The R1, resistance 1, resistance 2, they respect these zones. So I leave this on as well.
Okay. Is that in the indicators? I'm not seeing it.
It's in the indicator. So if I have it here where it says pivots traditional. If you go to indicators, I type in pivots. Did I put in pivots or pivot? Yeah, pivot points standard is the one that I have. Pivot points standard.
Okay, I got it now.
Yep.
Yeah,
use those as well.
I tried typing in traditional and it wasn't coming up.
Yeah. Pivot. I put in pivots and it came up pivot point standard, and it comes out and says pivots traditional. I don't know why the two would be separate. but I'll use that too with the R1, R2, the pivot. By the time you put, different things on here together, sometimes I have to turn one thing off and turn something else on. What I like about VWAP too is for the session, you can also go under the gear shift and change it from the session to the week and to the month and to the quarter. You can change it to anchor on other time frames, and that'll help you with longer terms. So if you're looking to, for example, if you want to trade SPX for the week, we could have looked at it maybe Tuesday or Wednesday and said, okay, anchor it on the week and let me see what's the outer bounds for SPX for this week. And that could potentially provide strikes a couple days out. We had a strategy we were using for the 1 DTE, and then we changed presidents and the volatility went crazy and our 1 DTE strategies started getting breached all the time. So we didn't use it as much. Okay. I think you were with us when we were using our 1 DTE, weren't you, Jared?
Yeah, I was a little bit. I wasn't participating as much because I was still learning, but yes, I was with you guys.
I remember that. Anything else from this chart we need?
I don't think so. That helps out a lot and it cleared up a lot.
Ooh.
So now I can actually chart and everything with you guys now.
Yeah. Sounds good. Anybody else got a charting question?
I did have a real quick question on PDT hack though.
Yep,
Just real
go
quick.
ahead.
So when the price action is going up, that's when you would want to do a put credit spread and then try and PDT hack with a call credit, right?
Yep.
Okay, and then just just reverse it. If it's going down, you do call credit and then hack it with with a put, right?
Yep, exactly.
All right, cool.
Yep. So let's say, for example, today, if you had a put credit spread, you'd go with that first, and then your second trade would be your call credit spread as price was rising, right? And then if you were like yesterday, I think we did oh, I didn't mean to move that. Yesterday we had a call credit spread was our first trade yesterday. We were up in here. We did a call credit spread as our first trade. And then as price went down, we did our second trade as a put credit spread.
Okay.
That's the way you do it. The first trade is with the trend.
Okay.
How many band multipliers you got on VWAP? Is it 3 of them?
I think I have 3. Yeah. Yep, all 3. 1.3, 2, and 3. I use all 3 of them.
Okay, thank you.
Quick question.
Yep.
I think I probably missed the class and don't know what video it is, but I noticed that I heard you keep saying, draw your 6 lines. Can you go over that for me, or?
Sure. So the 6 lines are there. There is a video that I brought a couple times, but the 6 lines, I want to say I put it in here. I think it got 6 lines. Did I put them there? Definitely worth. I think there's a video of the 6 line strategy, and I know that sometimes we get videos. TJ actually is the one who taught it, and so he's definitely going to cover it much better than I do. But here is the 6 lines: opening range high, opening range low, basically the high and the low of that 15 minutes chart, the previous day high, previous day low, previous day open, and previous day close. And the reason you're marking these lines is these areas will provide support and resistance. Previous day high and low, previous day open and close are going to cause slowdowns. So definitely want that opening range. So let's go look at the chart. All right, let's go look at our chart. If we're looking on for like today, I'm gonna turn off these things so we don't get ourselves confused into what we're looking at, right? Our opening range, high and low, looking at that first 15-minute candle. You can do it with 15 or 30 minutes. I've been doing it with 15, but it can work with 30. But you're doing the first 15-minute candle, the opening range high, so the high of that candle and the low of that candle. I do it with that. And that's so when I say we're back in the opening range or we haven't done the breakout, like we broke out here, but we came right back into it. We broke out and came right back into it and went out. Again, that's where that opening range is. If we change this to a daily chart, we can now see today where, okay, today, not today, there, find where today is. Okay, this is today. Y'all see this candle for today? This foolery. So let's say we're looking at previous day high. The previous day high, which is today now, is up here, the top of today's candle. Previous day close is the same thing as going to be the previous day open at this point, right? Previous day open, which is the same place, like I said, because the open and the close are pretty much together. Let's look at yesterday, that way we can see. Open and the close would be like this, open and close, because green candle, open down here, close up here. The previous day high would have been up at the top of the green candle. And I don't think I know what that is. Previous day low, we'll bring this up. Previous day low would be that candle. I'm looking at yesterday now, not today, because today just has it all together. But opening range, that's today. Open, close, low, and high of the previous day. Lets you know that when price is moving about the subsequent day, it will respect some of these zones as support and resistance. All right, that's why we're marking those zones. Okay, was that clear?
Oh, look, today
Yes,
didn't even
ma'am.
go
Thank you.
past. Today didn't go past yesterday's close.
Mm-hmm. Yep. Go past yesterday's close. It went right down to it almost and turned back. Played support.
That's because we dropped yesterday. I think Bershel had a question. I don't know
I
if you.
saw that. Virtual,
Oh,
I saw your hand up. I was trying to swing back. Well, I was gonna swing back. So now if we're setting up for today, you know, previous day high is 57.19. Previous day low, which is now today, is here at 56.35. And the open and the close are gonna be right at the same place because they're very, very, very close together. So that's what it would look like now for today. So when we put our numbers on for tomorrow, you have same 6 lines, but what you need to change in the morning is your opening range high and opening range low on your 15-minute or 30-minute chart. That lets you know if we got a breakout. If we're breaking out going up, that lets you know we got a trend. If we break out going down, that lets you know you got a trend. Like today, we saw that it really didn't get outside of this zone too good. And then it finally broke out with a little bit of a trend, danced around, and then came right back into that same opening range. It came right back into it. Now, usually the opening range will also provide support and resistance because I've seen it come right back down, like even here. I've seen it come down to the opening range and touch it and turn back, which is the same thing it did right there. Gap is filled here, done for today. Virtual, what's your question, hon?
I was just curious, what's the difference between on your indicators, the EMA 9 and the EMA 20, 90, and 100 and 200 thing?
So the 9 is gonna hug price a lot closer. So it's gonna give you, you know, much quicker response to what's going on. The 20 is this orange one. So the 20 is gonna be a little more loose. The 20 is always gonna act like a lasso. If price gets away from the 20 is going to pull it back in. So you can kind of know that if the price gets too far away from the 20 period moving average, you can expect it to come back to the 20. So that can help you with some price action things. The 50, the 100, and the 200 are more for trend, determination. When this is the 50, 100, 200 is what these are. When you see these all stacked up, this lets you know that we're bullish because they're stacked up going upwards. And if they're flipped over, that basically is a downwards. But we use the 50 primarily to determine trend. If you're on top of the 200, then you're pretty much going up. But the 100 and the 200 are also going to be strong support and resistance because you're taking in 100 periods, whatever time frame you're on. You've got 150 periods and 200 of those, which means those 3 time frames are going to play strong support and resistance, which is why you'll see price kind of dance around the 50. It's because it's not clear, it's not able just to run away or to run straight through the 50 period moving average. 9 is going to be a close mover. It's staying close to price. 20 is going to act like a lasso. If price goes away from it, you expect it to pull back in, and then it'll maybe pull in and bounce and then go away. It may come through it and go away, but 20 is going to be like a magnet almost. And the 50, the 100, and the 200 are going to be indicators as to what longer term trend you're in, and they're going to play strong support and resistance. When they start crossing over, you can also tell that we're getting ready to go a different way. So looking back here, this is on the 15-minute chart. All the moving averages are getting close together here, and then they start crossing over, and before you know it, they're getting close. They crossed over, and then the price started going upwards. We got a move that went the other way. This is the moving average crossover. Some people use that as entries to say once the moving averages cross over into the lower, lower on the top, then that's a bullish move. The higher on the top is a bearish move. Some people use that as a strategy.
All right, thank you.
You're welcome.
Coach, that ORB is just that one candle?
Yes.
15 minutes?
Yep, 15 minutes.
I guess that, you know what, I had blocked from the time we open up until 10:30 or 10:15, that whole span. Okay.
Yeah. Now, if you want to do a larger range, you can do the 30-minute window and take and move it to the 30. I've changed it to the 30-minute chart. You can do the 30-minute candle and let that be your opening range. It's a little wider, and you won't get as much. The 30-minute window will keep you from like false positives or false breakouts. Like you see here on the 30-minute window, it broke out here, but it stayed out one candle and the next candle came right back in. Where the 15-minute would have given maybe an indication that it wasn't really out, but it wasn't. But when it went back through this time, you knew it was out when it went back through the second time. But even with Ariane, the X options young lady, I think they trade the second break of the ORB. So if it breaks out the first time, this would have been the first break. This would have been the second break. They trade the second break, which, okay, you can go with that. But sometimes I would feel like I'm going to miss something if I just trade the second break. I'd be like, what about the first break? I could have got something here. But the second break many times is a more defined move from what they say. I don't know. I don't have the patience to wait for the second break. But maybe if I did, I wouldn't miss as much. Because like second break, if you traded this second break right here, definitely wouldn't have no problem getting that PDT hack set. This kind of move would have no problem setting a PDT hack. This kind of move, maybe not. This one, no problem.
Listen, what's the highest you can make on the PDT hack? I wanted to ask that question, but my hands were tied up earlier when you was talking.
The most you can put in on the other side is 495. That's the most you can put in on the second side because the trade is worth no more than 500 and you got to sell it for something. So the most you can put in on the second side of your PDT hack is 495. That's the highest number you can put in the box. So
Thank
whatever you put in, whatever you received on the first one, the second trade can be no more than 495. You'll see it sometimes going up into the 5s and whatever, but you're not gonna get filled for that. I think TJ one time got it because the price was just going crazy, but 495 is the most you're gonna get on it. TJ, you got a question?
Yes, ma'am. For what's her name? Is her name Ariane, I believe? I think I've learned something, but I don't know if I've learned it correctly. So
Okay.
since I've been with you, I've been doing the PDT hack, right? And I know it means pattern day trader, but I just was always afraid of it. I don't know why, right?
Okay.
So it's okay to use a day trade, right? Like
It is.
it's
Yes.
not against the law, right?
No, it's not
Right?
against the law. No, it's
That's what I
not.
was thinking.
No,
So in my
no.
brain, Miss Arlissa, I'm afraid of it like the plague. I'm like, oh no, we can't use the I can't do it. I can't do a day trade. Oh Lord. But I was like, wait a minute, it's okay. It just means you got 3 of them, right?
Yes.
And you got to keep
Yes.
track of it,
Yes.
right?
Yes.
Am I right?
You're right.
So
You're
tell
right.
me this, Miss
Yep.
Arlissa. Then what is she doing then? Because she's doing something that are we not doing the same thing as her? Like, how is she saying I'm getting out when I get my $35? Like, I know she's using a day trade, but what is she doing that we're not doing? Do you
We're
know
doing
what
the
she's
same
doing,
thing. The only thing
Ariane?
she's doing the same thing. It's just that she only wants to be in her trade for the morning. So because she wants to be done with her trades by 11:30, 12 o'clock, she is closing them so that she's not in the market all day long. So that's just a personal choice she's making. She's saying, I want to go in at 10:30. I want to be done by 12 o'clock. I only want to be in the market for this period of time. I want to be done with the market and off doing other things. So she's closing them in that window of time. So that way she can be done and out of the market.
She's very
Okay.
mechanical.
Yes, she
She's
is.
very
Yes, she
mechanical.
is.
She sticks with her trades. And she only does that, Monday, Wednesday,
Monday,
and
Wednesday, and
Friday.
Friday.
Yeah.
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 So what are I mean, I guess I'm not understanding. So in our world, in the Arlissa world, we will put on, for example, our put, and then is she finding a strike? I'm not understanding. How does she know when to get out? What am I not? I'm not connecting something. I don't know why.
So she's generally picking some strike in the morning, and she may be using Magic 8 Ball at 10:30 or whatever. So she's picking strikes based on that. She has a price that she wants. She wants to make at least 85 or 90 cents per contract. She's putting on a certain number of contracts, and then she's saying, if I take in, $90, I want to close it for 45. If I take in 80, I'm closing it for 35. And she has a set plan, and that's what she's doing. And she's like, okay, I'm taking one trade, I'm putting on this many contracts, and I'm getting out at this dollar amount, and I'm getting out by 11:30, 11:45. No matter what's going on, I'm out of here. And she's closing her trades. Where we're getting in, looking at different things, and we're riding it through the day. We PDT hacking. We 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock. She gone. She on about her life. We still looking at charts.
Yeah, okay, because I'm not gonna lie, I kind of looked at her and I'm like, I like that, but I don't know if I think I was just always afraid of using a day trade. And I'm like, no, TJ, I'm trying to embrace that. It's okay to use it, right? And then on them other days, if a perfect week would be use a day trade Monday, Wednesday, Friday, and PDT hack Tuesday, Wednesday, Tuesday, Thursday, but you need that hack to catch so you don't use a day trade. Am I making sense?
True. Yep, you are. And that's true. That's true.
Okay.
Yep.
Okay, thank you so much.
One of the thoughts is that the more we expose ourselves to SPX, the more opportunities we give SPX to snatch our money. So the shorter period of time that you're in SPX, the less amount of time you give SPX or the market to get you. basically. The longer you're sitting around, the more opportunity they get to get you. Like for us, if we were to take our money in the morning, like when we get our money, like today, if we had our money, we closed up those trades and we were done by 1 o'clock and we were off with our lives, we wouldn't have no problems. But when we decide, okay, let's see, it's 1:30, let's get some more trades in, and we still in the market at 3:45. Many of us had good trades that were going today, but we still putting stuff on in the afternoon. Next thing we know, 3:45, the market drops and our good trades from the morning are no longer good because we still there. But if we were gone in the morning by 10:30, 11 o'clock, not 10:30, by 11:30, 12 o'clock, if we were traded and done, we wouldn't care that the market tanked at 3:45.
Is that
Right?
two call? Yeah, is that two call spreads though? Like, how would we do that? What's the mechanic? So if we put a put over here for 90, we take in 90, right? Let's just say, for the sake of argument, I got 10
Okay.
contracts and I want to get $50, right?
Okay.
How do I close that out on our options chain? How would I? Is that another call? Is that a put on the
No,
other end?
if you don't do a PDT hack, you mean?
Yeah, if I don't do a PDT hack.
Okay. So if you had so you got 10 and you got some put credit spreads and you took in $95. Let's say you took in $95 and you want $50, right? Right? So as
Yep.
soon as this PCS or this put credit spread, as it draws down to worth $45, when it gets to where it's worth $45, you buy it back. That's word buy. It does not look like it. That word says buy.
Okay.
You're basically going to buy to close. You basically go into and I can show you on the option chain, but you're going to buy the vertical for that $45. And you're closing it. You sold it for $95. Right? And then when it gets down to $45, and generally it happens with price action, as the price goes away, let's say you started off here with a put credit spread, and as the price goes up, 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 this right here gets to be worth 45 cents. And when it's worth 45 cents, you buy it back. You buy the close, you buy the vertical, 45 cents, and you close it.
And
Okay,
that's, oh my goodness. Okay,
Yep.
I might look
No
into that, Miss
PDT hack.
Alyssa. Just
No PDT hack. You just buy it back. Let me see if they're still open. And I think SPX is still showing here. Even though, let me move this stuff out the way so we can see. These are all, done, but you can still see if I was just showing you the steps. So if I was buying this back, I would take both of the puts. Okay, I would click one, use the control and click the other. Okay, I'm clicking both of these, both of the puts. Okay, I have both of these selected. I'm going to right click on the mouse. And then it says create closing order. And where it says buy vertical, I would buy a vertical. In the case of the example I just used, we would put 45 in this box. And you could do this right after you entered the first trade, so that when it got down to worth $45, it would close on its own. Same way you do with the PDT hack. You just would go to what you have and you would put 45 in this box. It's green. That means you're buying back now. Red is when we're selling. Green is when we're buying. And you would buy it back. And when you're ready, you would confirm and send. And when it got to be worth $45, it would close. And you would use a day trade because you would have opened and closed on the same day.
Oh my goodness. Okay, all right. Thank you, Miss Alyssa. I appreciate it's so much to this. This is just wow. Thank you so much.
You're welcome. You're welcome.
You got to have enough money in your account though, right? To do this every day, the day trading every day.
Well, if you're just going to do 3, you got 3 in a week, you can do 3 of them in a 5-day window of time. But if you have over 25,000, you can do as many as you want. but you can have less than 25,000 and you just have to do 3 day trades in a 5-day window. You can't do, you know, every day all week because you only get 3 in a 5-day period. But you do have 3. You have 3 to use. You can use them. You know, like TJ was saying, you can use them and you don't have to never use them. You just should use them sparingly. Use them wisely. Somebody else got a question?
Mr. Alyssa, someone in the chat said, can you get around the 3-day trade rules by using multiple accounts?
Yes. Yep. Now, if you're in Thinkorswim only has you, of course, you got your IRA if you want to use that. You got your margin account if you're using that. Of course, you can use Robinhood. That's not why I use my Robinhood, but I could day trade in Robinhood and day trade in Thinkorswim and do opposite days. I get 3 in Robinhood in a 5-day window. I get 3 in Thinkorswim. If you got Webull, you get 3 over there. 3 in Fidelity, you get 3 no matter your account. It's not like I, as a person, get 3 across the board. No, I get 3 with every broker. We get 3 with every broker in every account. So yes, you can do that. Yep, that's one way to get around it for sure. Okay, Jared. Lisa says that she has Wolf, wrong stock, selling cover call on Big Bear AI expires tomorrow. Yep, I have it. I have Big Bear AI. You got a covered call expires tomorrow? If you got 4.5, it's fine.
Yeah.
It should be, unless, it's at 3.2.
No, yeah, it's still in the 3s.
Yep. All righty, y'all got anything else? We've been on here a couple hours. This is great.
So you don't need an OCO
To do what?
to get out.
Of a...
Oh, the OCO is for the stop loss.
Yeah, if you're gonna
Okay.
stop loss it. Yeah,
Okay.
yeah.
Okay. I was trying.
Yep. Yep. If you were talking about using the stop loss or the profit to get out, if you weren't using a PDT hack, that's where you'd use your OCO. But if you're PDT hacking it, then, you know, like today, I had one trade, this call credit spread, well, I had to put credit spread, and then the call credit spread is my PDT hack. That was from this morning. So this trade was done earlier today and finished. Right. So that's all the trade was for the rest of the day. So over here, not as concerned about whether or not the market tanked at the end of the day, because I was done. This trade was already locked in. I did the 57.35. I did that in my Robinhood account. So then I had to make sure that one didn't go crazy over there. So that was a different place. I wasn't doing it for that any particular reason, but I try to do the Robinhood accounts. If I'm gonna do Robinhood trades, I do them in the afternoon or later in the day, because you can't PDT hack in Robinhood. So if I'm over there, it either needs to expire or I need to plan on closing it. So I try to do afternoon trades over there, and the ones I want to PDT hack, I put it over here in Thinkorswim. And there's a different the way they look in these 2 different accounts, it looks different. I can tell where the trade is over here. I can't tell as well in Robinhood what the trade is actually doing. I can tell what the chart looks like, but I can't really tell the value of the trade as well in Robinhood. All righty. So in the morning, we're going to be back on here 8:45, 8:45. Okay, so I've been kind of enjoying our 10:30, looking at the market, letting Gamma help lead us in the morning. So tomorrow morning, we may have another Zoom call in the morning. We hadn't done any Zooming this week. This week, I finally finished up the projects I had earlier this week, and I'm done with those. Today I had errands, and then Tomorrow, though, we may be able to get on and do a Zoom call in the morning. So that way we can maybe look at together, be able to watch the gamma, watch the price action, and maybe get into our trade. I see you, TJ, with your clapping. We may
Yay!
Yeah, that's what I was saying.
may be able to get in together. So tomorrow morning, I think we'll be able to do that. Start maybe 10:15 or so. We'll look at the price and see what's a good time and maybe be able to do it together.
And
All
there's
right?
no orange folders, but all the FOMC people are speaking.
Yeah. Hopefully they said what they needed to say yesterday. Go. Whoa.
Yeah, after today, like really, what can you say?
Yeah. Today was a lot. Oh, God. So yeah. Yep, there's that. Okay, so that's my plan at this point is we will do that within the morning. Ward asked, was there a cheat sheet for the gamma? And there is. I'm gonna go get it again. Everything I put into everything I had pinned got unpinned somehow. So I'm having to repin the stuff that is impertinent. So I had a file on how to use. It was a document on how to use the gamma. There it
Coach,
is, gamma playbook
do you use
forward March.
the Magic 8 Ball for any other than SPX and SSP?
I do not. I've looked at it a couple times and kind of thought about it, but what are your thoughts?
No, I was curious because I hadn't, and I was like, I wonder if this is, something to consider.
I've I've been watching XSP and QQQ with the Magic 8 Ball. And I don't know. I did get in today. I got breathe through and it drops.
Uh-oh.
And I used it for QQQ because when you called it out, I got in the call, but I wasn't able to get in the put. So I used it for the put today. And the put is fine, but that call, of course, is still breached. But Magic 8 Ball says it's supposed to close around 485 tomorrow.
Okay. Tomorrow. Okay.
So that's why I didn't get out. So we'll see.
Okay. This is Tesla, and this morning in the impact community, JT called out a call on Tesla this morning with tomorrow. We're further back. Tomorrow expiration. So, and it was profitable this morning. So I didn't know if the Tesla one, but this says May 2nd. May 2nd was last week, wasn't it? Wonder why that's showing last week. What May 2nd that was last week, wasn't it? That's weird. Okay.
Sure was. Can you refresh it?
I don't know. Let's see, Tesla. Why is it not?
Nope, it's saying since May 2nd.
It says May 2nd, so maybe it's got something going, but yeah, that Apple says May 2nd as well. I wonder.
That's why I was looking.
I
I
did
was like,
notice today, Apple and Tesla, see how they not lit up? I did notice that today, but I never even looked at it.
Yeah, Triple Q is
something to
saying
look at. Okay.
Triple Q is saying that it's going to expire between 489 and 490. That's what it's saying here, between 488 and 489. Unless they're saying it's going to expire there today.
Oh, I was looking at the prediction for tomorrow. That's what it's going.
Okay, so if we look here, the predicted close, that's experimental, short-term, long-term, bearish, 491.
See right there where it says forecast 59 target
Where?
40. Right
Oh,
underneath.
right there. Duh, I see it.
Yeah.
485, direction is down. Okay.
So
Yeah.
we'll see.
Okay. Well, hang
But
on.
but to that point, Tanya, SPX, because I looked at it the day before and it had was it up?
Don't crush my dreams.
Oh, let her have a nice good night. She said, "Don't crush my dreams."
I ain't saying nothing.
So SPX forecast does say that it's 5650 and direction is down for tomorrow. So we'll see. Yeah. That's so funny. She said, "Don't crush my dreams." Spy is also here, but I hadn't looked at it
I'm
for any
living on
other.
hopium over here.
Oh, yeah, I see. It's, nothing wrong with that. Have a good night's rest on that. But I really wonder why Apple, I'm gonna have to ask about Apple and Tesla. But yeah, but there's other ones. I hadn't traded any other ones in here, but you know what? For the weeklies, it might be worth it to check, but I hadn't.
But you know what? But it don't have a gamma.
Yeah, that's true. And I'm leaning on the arms of my gamma. I'm leaning. But if you decided you wanted to pay for, which I'm not, but pay for Gex Bot Stream, Gex Bot Stream as a service does offer gammas for other stocks. Yeah, if you paid, because Gex Bot Stream is a whole nother like platform, and they do have it for other stocks for those who want it for other stocks. Okay. There's a lot in here. There's a lot in here. If you're on Magic 8 Ball, y'all can watch. I have my journal channel. You all can come and check out my journal channel over here.
I'm all up in your journal, girl. I be every day. Actually, somebody replied to you today. Yep, he did right there. I be on it. I be.
Did Brian trade today? I don't know if I noticed that he traded today.
He did. He trades
okay.
every day. He trades every day. Usually at 10:30, he enters his trades like clockwork too, and he has it set to where it closes. He either closes with profit or a loss, right? He has it set up immediately. Let me see, where was the? Yeah, he sets it right away. I think when you start seeing these things right here, 10:33. Looks like he took a loss. Unless he said he sold one at 10:32, 57:05, 57:10 call is what he sold today at 10:33. And this was some other thing he's testing out. He's testing out another, I guess his upgrade, his updated Magic 8 Ball. He's testing that out. Yeah.
Okay.
So, yep, he always puts his there.
Thanks.
Yep. All righty, everybody.
Thank you, Coach. Have a good night.
Always.
I'll see you in the morning.
I'll see y'all in the morning. Hasta mañana.
Stay
Good
green.
night, everyone. Thank you, Coach.
Good night, everyone.
All right. Goodbye, everybody.
Thank you. Good night, everyone.
You're welcome. Bye-bye.